Hey guys, Mike here. So another jam-packed video for you because we had a lot of economic data come out. I'm also going to talk to you about what happens when December, January, and now that we're done with February is green, and the data is pretty stunning. So I'm going to show that to you up front at the beginning. Also something, if you hadn't noticed, that this is happening, and this is why it's happening, okay? Especially when it comes to small caps is what I'm talking about. You can see it. And I'll tell you, I finally figured out, I can tell you why it's happening. Finally, I guess you could say, because it seems like it's taking forever. And we'll go into some other charts and stuff, because I will have a message at the end of the video once I've covered everything. For those who are actually normal viewers, you'll probably stay. For those who are just tourists here, you probably won't stay. But I'm going to make some changes to the channel, and so I want to keep you guys up to date and just keep you informed, okay? So now let's go ahead right off the bat. Let's get into, it may not be shocking news, but it is news. We had a lot of data come out today, okay? And you might have noticed the market swinging all over the place. First, you had PCE come out. This is what the Fed loves to look at as far as inflation data. Everything came in line to the penny. Your jobless claims came in line as well. But boy, does the housing market, which came out after the market opened, still look like hot garbage, right? January pending home sales, minus 5% month over month. They were estimating plus a positive 1.5%. This is after a positive 5.7% prior. And so as you can see by the chart, just looks terrible. And we should not be surprised, right, guys? I mean, come on. Then you had Chicago PMI come out later on as well. This is what got the market swinging over the place. And no surprise there, it fell to 44, still in contraction. The estimate was 48, so not even close. Prices paid rose at a faster pace. New orders fell at a slower pace. That's actually a decent thing, I guess. Inventories fell at a slower pace, and production fell at a faster pace. Employment remained in contraction, but the important thing is, remember, it's cycles. We thought we'd turn up into a new cycle. Oh my goodness, we're actually getting into expansion now and all this good stuff. And boom, it turns back down. So it's like, oh boy. And now that leads us into this right here. And it's like another clue this bull market has in legs. Whether you like it or not, who knows? We'll see. What happens when the S&P 500 is higher in November, December, January, and February? I left out November. I apologize. And you can see there's a whole lot of green, buddy. I mean, March, you can see the section is the second section there. You get a couple of reds here and there, but most likely, believe it or not, is somewhat green. But then the rest of the calendar year, final 10 months of the year, next 12 months, it's up quite handily. And so, if you're long, it's a great thing. If you're a bear, obviously you don't want to see that stuff, because every time we keep presenting this stuff, it keeps rolling higher, right? And so again, I know everybody's waiting for a recession, that kind of stuff. And who knows if that's going to happen. Like I said, until that yield curve uninverts, all of that is for nothing. I'm telling you right now. So don't even try to sweat that stuff. We're going to have ups and downs. We're going to have pullbacks. I mean, I think everybody's been waiting on a nice pullback here. Who knows if we're going to get it in February, March. That's normally your seasonal weakness. But pause this, look at the numbers, let me know what you think in the comments. Now, please hit that thumbs up, because it helps people find this video. And if you like financial content where somebody does not try to make themselves seem smarter than they are and talk over your head, please hit that subscribe button. I really appreciate it. All right, moving on. And that leads me to what's going on in certain areas, especially small caps. I'm going to show you why. You actually have two things going on. I've been tracking this for a couple weeks now to see if this is a pattern and a trend, and that's exactly what it is during this earnings season, because now you're coming into a boatload of small caps reporting. Especially this week has been a lot of small caps. But there's two things happening here. First, you got your garbage stocks like Beyond Meat, right? What is it doing? It's short squeeze. I mean, look at this. Up 75% after earnings, which is crazy. But here's why I say it's crazy. And this is nothing but a short squeeze. Look at the earnings, and this is a joke, of course. They said, wow, Beyond Meat must be announcing the AI hamburger. You would think being that much, okay? Almost doubling on an earnings report. When's the last time you heard a stock actually doing that? But look at the earnings here to prove my point. Revenue for the October-December period fell 8% to 73 million. But not as bad as they thought it was going to go to 67 million, but it didn't. Ooh, that extra 7 million. But here's what's nuts about this. The U.S. sales fell 23.5% during the quarter, and that's despite selling at lower prices in the grocery stores. So they lower the prices, and it still fell. I don't eat this stuff. Let me know in the comments if you do. Maybe it just tastes bad, but don't worry. They're going to reverse these losses by offering a burger that has less sodium and saturated fat and more protein. Woohoo! But here's why this thing squeezed, and this is what you're noticing. Small floats and a large short position. Look at that. That's why this thing almost doubled on an earning report, for God's sakes. It was up 15%, I think, today, as a matter of fact. So that is a short squeeze. What else are you seeing? Here's the stocks that increase the most in price, right? I want you to look at the market caps. A lot of these market caps are going to be much smaller, which means they're most likely on either IWM or 2000, the Russell 2000 or the Russell 3000, one of the two. But just, you'll see a lot of these are mega moves here. But a lot of these, even if they're on the Russell, short squeeze, short squeeze, short squeeze, shorts are covering. It really don't even seem to matter what the freaking earnings say. But again, if you look to the right, to the last column market cap, you're looking for stuff like, 20 million, 50 million, 100 million, that kind of stuff. That's what you're looking for, not the billions, not the trillions, okay? And you'll see a lot of them are traded on the Russell 2000. And I just did a members video on this, for God's sake, showing them what's been going on. Just pull it up, because I have the Russell 2000 stocks actually in my TradeView account, so I can just scroll through and look at all of them. Crazy moves. And here's what's happening. Not just short squeezes, but for the first time in well over a year on these earnings, now you're finally seeing the EPS growth, right? Actually outdoing SPX. And so that's been a long time right there. And again, some of these do have good earnings. Some of these just don't have any, just terrible earnings. But they're so highly shorted, and a lot of them have these low floats, just not a lot of shared issues, so they can move really fast, right? And then, of course, as shorts are covering, and you know what's happening. Like, people having large short positions, if they know they're covering, what else are they going to be doing? They're going to be buying the stock, right? So they have to buy the stock to close the position now. But I mean, actually buying stock to go long and ride that big move up, right? And so they've shorted them to death. Now they're trying to run them up. Again, how long will this last? We don't know that. That's obvious, because we've kind of seen stuff like this. Probably, what was it, like November last year? But again, what they do, they wrote them up, started shorting them down again, and now they're riding it back up again. And so in this earnings season, it's been better than a lot of people expected for some of these companies. And again, I don't know, Beyond Meat, some of these others, if you read the earnings reports, they're freaking horrible. But it don't matter, because there was selling pressure coming up. And so they knew, like, man, we better cover this stuff, because we're about to get wrecked if we don't. And they're already up huge in a lot of these shorts, right? And so, what else is going on today on the big ones, right? AMD, massive move. Congratulations for anybody in this stock. 8%. That is a big, big move. We had talked about it. It was just wedging. It was sitting here stuck in this range. And it finally busted up. I'll be honest with you, I couldn't find any news. I looked for like real news. I mean, they said they're ramping up their production, but I can't imagine that's what's going to put them up 8%, because when you look, NVIDIA wasn't doing anything. But here's the key to this. It popped up over the previous all-time high, right, and retested and went. Okay, so that's a good thing. The only thing I can think that pumped it up was the options market, because it was #1 by a country mile when it comes to the bullish flow for options, right? And nobody else is even close. And so again, ARM, which we'll talk about in a minute, is another one down there. But when you look, we pull up NVIDIA here with AMD, and you can see this week alone right here, boy, AMD has had a great week, right? I mean, they're positive. NVIDIA is negative. Now, of course, and that's why I was trying to figure out I didn't see anything negative for NVIDIA. Didn't see any like crazy real news that should push it up. Now, of course, when you go a month out, you can see NVIDIA is crushing AMD, right, as far as how they're doing. But you can see, I mean, they basically go hand in hand, except when it comes to the earnings, right? NVIDIA takes these huge leaps. AMD does have a good leap, but nowhere near as much as NVIDIA. But, right now, 200 seems to be what a lot of people are targeting for AMD. Now, speaking of another one, it's going to be ARM, right? So this is ARM Holdings, another semiconductor. Getting some nice bounces. I believe this is the 9-day EMA right here. You can see us in this formation, just wedging, like a lot of them are getting pinballed. And, I mean, this is going to make a big move either way, coming up here very soon. And you see the volume, how it has been decreasing down, that selling volume especially. And this is usually when people start to see these pops. When we look at this on a smaller time frame, you'll see more of what I'm talking about here. And you can look down at the bottom of the volume, how this has been reacting and stuff. And so a lot of people are picking this to go back up to that top trend line before it's either going to see a rejection or a big breakout on this one. And you can see this one right here is doing almost what AMD did, right? Where it's just sitting there testing that top line, looking like it wants to break out. If you look at the past when this broke up, it's the same formation. And so pay attention to this one right here. Again, I think in the next probably 2 or 3 days, you're going to see a big move in either direction. We'll have to see which way, because, I mean, it's going to go where the market's going to go right now. And it seems like semis are still hot, but, I mean, are they too hot? It's the big question now. Okta's another one. And this one right here was kind of left for dead because, other stocks have been, that's in the same sector, just been getting crushed on earnings. And this one right here, actually hadn't seen this in a long time. I drew this a long time ago. and it broke out of this pennant formation, came down as it wedged, and then used it to launch in earnings here. And they actually had a good earnings call. So, and I didn't see a big short on this one right here. So, shockingly, this one's up like 20% at one point in time today. But when you look at this one, we pull out weekly. Look at how devastated this stock was. I mean, major crash. Used to be a $300 stock. Let us know in the comments if you're still like up there between the 250, 300 range and just been holding on to this one. And you can see how long it's set in basically stage one, right? Look at the volume down below. How that volume's increased quite a bit. It's been pushed up. It's been very volatile. Big swings up or down in between like that 50 and 85 area right there for months. So, anybody who held through that, congratulations to you. You finally got rewarded and stuff. But when looking at this one, you can see we're going to go ahead and put on here the 30-week moving average because we're on the weekly. And you can see it's finally starting to go up into a stage 2, right? And so go from stage 1 where you consolidate, and stage 2 is the breakout where you actually start to get the most of your gains and stuff. And then you can see it tested that 30-week multiple times, broke down below it. And now it is quite handily above it. And you can see this is a stage 2 right here. And that's what you want to see, where it just goes up, starts coming down, retesting, continuing to move up. You can see it's very volatile, big swings. That's the kind of stock this is right here. And so again, you want to get above that 112 level right there is really where you're looking at. And so if you can get above that, and we'll put a horizontal line there, break above that, come down, retest it. Then you got something going on with this one. Again, I mean, I never buy stocks that make this big a move anyway. There's no way. I'm not chasing. Just let it go if it goes. But again, you should see some kind of consolidation down. But if it breaks above 112, comes back down, has a successful retest, that's a great sign for it and everything. So we'll go ahead and mark that out and see how it goes. And now that leads us to two other sectors to watch out for. I mean, the stock charts all kind of look the same, but you're looking at industrials and financials, right? You can see here's a bunch of these. You should know these names and stuff. Start pulling these up on your own. Look at them. Obviously, industrials setting up a lot of all-time new highs. Financials are starting to break out, even though you would think the rate cuts would be, something they would be looking forward to. Rate cuts have been pushed down the line, yet financials continue to still perform decent here. So pay attention to those two as well. And then when it comes to earnings, just some high beta stuff. Again, Plug and Fubo, what do they trade off of? The Russell 2000, right? So these are two more. There's like 4 or 5 on this list that all trade in Russell 2000. So we'll see. In 2 of those, I believe these have high shorts. So we'll see if they end up going, massive move up or down. But then you will have a lot of data coming out after market opens. S&P Global Manufacturing, a lot of ISM manufacturing data. Again, manufacturing data has been getting ignored like crazy. Then you'll have Michigan Consumer Sentiment, a lot more Fed speakers. And that's something that's been all over the place. You got some Fed speakers, whether they can vote or can't vote, saying by summertime they see the first rate cut. Others are saying they want to be data dependent. Shocking there. But mostly, pretty much the consensus is they don't want to hold rates at the height they're at right now too long, right? And so, when you look at this economic data coming out, and I'll have some more over the weekend for you to kind of show it's going to be pretty stunning if they cut before summer when it comes to this economic data, because, look at employment, things of that nature. It'll be surprising because the market continues to ignore a lot of this stuff anyway. It doesn't matter. Remember, the market's not the economy, and so we know that. But when it comes to what we're going to be doing going forward, obviously, I'm not going to do a Friday video because I want to enjoy my life some more, spend more time with my son. 2, we'll still do the Saturday video, so please put your questions and comments down. I'll continue to do that one as long as you want it. And then, of course, Sunday's video will set us up for the week. And then during the week, I will do videos when there's something happening or going on, or I feel like there needs to be, stuff put out there and stuff like that. I'll do that, no problem. But I ain't going to try to, just start adding stuff in and things. So please, if you got any suggestions, let me know. Somebody in the comments put something in there, and I totally agree with them. I've been thinking about that for a while. And things you'd like to see. If you got tickers you suggest, no penny stocks, no crypto stocks, none of that mess, don't put that in there. Okay, I'm talking about regular stocks, okay, that everybody can buy, get into, and so not some crazy mess, okay? You can even put some highly short stocks. You can put some Wall Street bet stocks, and that's fine, as long as it's not penny stocks, okay? I don't care. But, feel free to put it in there. Again, I always say this is your channel, not mine anyway. And so, again, just put that in there. And so you might see some adjustments going forward and things like that. So just wanted to make you aware of that. Of course, again, appreciate all you guys, all your feedback, everybody joins the membership and all that good stuff. Really appreciate it. And so I'll see you guys Saturday.